Hi, good morning, everybody. How you guys doing? Morning, GWC, Debbie, Cav, Dwight, good to see you. Miss Sophia, nice to have you. Gary, got all the cool kids in here today. Hope everybody's doing well, healthy, happy, doing all the good stuff, getting ready for the holidays. Bought your turkeys, bought your hams, whatever it is that makes you happy. Guys, welcome to the room. Let's see who's here today. I'm not sure that we have anybody. Have my new favorite, Tinfoil Monk. That may be the greatest name ever. James Bird, welcome to the classroom. Nice to have you back. Craig, hope the education's going well. Don't be shy if you have questions. Guys, it's great to have you in here today. I'm looking forward to the day. I have a little rattle in my ear. It's weird. I may have to pull out one of my headphones. Whoop. My earbuds just threw Howard Jones in my ear really loud. Let me make sure I'm connected to the computer, guys. Sound check now. Can anybody hear me? Nope. You got me, Cav? Yep. Weird. I just had to disconnect and reconnect. Cool. I was ignoring you, though, just for a minute, guys. I want to remind you that I can be a little petty and just ignore you for no reason at all. Good morning, everybody. Carl, good to see you. Hey, Shaq, nice to have you back. Um, so what I was saying is those existing home sales, guys, it's a medium impact, which means that it can move the market. It can make it a little untradeable fast. I don't trade news, so I don't watch the news and say, oh my gosh, existing home sales, if they're good, fantastic. If they're horrible, well, then I'm going to do this, right? What I am saying is somebody that moves the market may have that reaction. So I just don't want to be in the front of it. And I make the choice not to trade into it or to not be active in the market when news releases happen. And then everything that I talk about throughout the day, guys, comes from the Nexgen education page. I'm going to take a second today because we do have some new users in here. The software user guide from the education page. This is your NinjaTrader how-to, guys. This is everything from screen capture programs opening, closing your workspaces so that they're still there tomorrow, connecting to accounts, setting up stops and targets. If you want to delete your old charts and templates and start fresh, there's a way to do that. It talks about resetting your simulator, rolling contracts, using chart templates. It goes into Ninja Data, repair and reset. Really, if you have a question about your NinjaTrader, chances are you're going to find it here. I always encourage you guys, though, feel free to ask in the room. So if you're like having a Ninja issue, just go, hey, Mark, I'm having a Ninja issue. Can you fix it? Because a lot of times I have broken everything that you guys are going to break, and somebody had to teach me the fix, and I'm always glad to share it with you. But I wanted to throw that out there today. Even scaling charts is in here. So if you're brand new with me, go through there and check it out. And then everything that I talk about comes from the tutorial section. There really aren't any secrets, and I say that a lot, and I feel like people always feel, oh, there's got to be more. It's going to take more than he gives me to be successful. He's just given me a little bit, and he'll probably sell me some more, but I'm not going to. I'm going to give you anything and everything that you need to be successful, to be consistent, to make money in this market. And I'm going to do it in the most simple fashion that I know how. I'm going to try not to complicate anything. And I'm going to go to the glossary of common terms real quick, and I'm just going to highlight high probability trade. And let's talk about it. A high probability trade, guys, it means that every indicator on every chart lines up for the trade. There's nothing going wrong. Hey, good morning, Chef. Welcome back home, man. North Carolina, right? Better food than England, I'm told. I've had some great meals in North Carolina. Guys, this high probability trend trade is when your triggers are the strongest. There's nothing in your way. And as it turns out, those are the first two rules for our high probability trend trade, which is what we're going to talk about for the first hour. Maybe the first hour and 12 minutes, who knows? But we're going to talk about this trade, and we're going to talk about the rules for it, and we're going to look at them and understand the advantages that it presents. Because this high probability trend trade, it's not designed to be the end of your learning path. It's not designed to be all you ever do with Nexgen if you choose not to. It's designed to turn you into a chart reader. It's designed to just get you comfortable with looking at your indicators and understand what they're telling you. Because 90% of your day, some of you tell me it's 99%, but 90% of your day is really just reading your charts, waiting for advantages. We saw a lot of it yesterday. We were able to sit in this room and discuss the advantages of the rules. And while we weren't able to take trades during times of indecision, we had the ability to avoid trades during times of indecision, to not give the money away when it wasn't appropriate to give a trade a try. Your ability to read charts is going to give you some pretty cool tools, guys. You're going to be able to understand where the market is likely to go and then really get into the market at that spot or I'm sorry, where the market is likely to continue. These continuation points will be your entry points, where that trend is most likely to continue. And then you're also going to understand where it's likely to go, and this is going to help you make intelligent targets. Know when it's appropriate to hold for bigger moves. And then finally, you're going to understand where the market is likely to stop. And guys, I can't tell you how amazing likely to stop areas are. This cyan line was an area where the market was likely to stop, and sure enough, look at the bounce that creates off of it. These yellow one-to-ones were an area where the market was likely to stop, and look at the bounce it creates. And what you're going to find, support, resistance, is you'll be able to identify these key areas, these likely to stop areas. And they do two things for you. The first thing is they tell you not to trade into a place where the market might just stop, it might reverse. And you really don't have any idea whether it's going to stop, to reverse, to bounce, to become untradeable. So you learn to respect these areas and not trade into them when it isn't advantageous. And then these likely to stop areas, we call them termination conditions. When they reverse the market, when a termination condition makes that market go from up to down or down to up, we're going to call it a strong top or bottom. And a strong top or bottom for you guys is the best case scenario for looking for the high probability trend trade. When the market reverses off of one of these key areas and then the rules are met for a high probability trend trade, this is a trade that typically wins 70 to 80% of the time. This is the trade that's going to build confidence through the memory of success. And the cool thing is this high probability trend trade, it's only three rules. I know that you guys like to complicate things. You like to overthink things. If a little information is good, then a lot of information must be better. But guys, I'm telling you right now, let's embrace simplicity. You only need three rules to find this high probability trend trade because each rule is designed to give you an advantage, and those are listed in yellow here. Um, a trade is nothing more than momentum, a clear path, and an entry area. That's all it is. That's your recipe, your equation, if you want to use the FOIL method on it and break it down. But a trade is momentum, clear path, and an entry area. Each of these advantages comes from the rules. The first rule gives you strong triggers, which provide momentum. The second one, none of those termination conditions, giving you a clear path. And then finally, we'll use a rule for an entry to get you in where the market is most likely to continue. And these three rules very simply happen on only two charts. We use a large chart and a small chart. I don't even mention the numbering on the charts because it's irrelevant. A large chart and a small chart. A large chart is a broad stroke of a brush, guys. It's a slower moving chart. And what it is you're going to use the first bar, the most current bar, where price is literally doing its thing on this large chart. And it's going to define the direction of the market. It's going to define the momentum of the market. And it's going to define the areas that the people that control the market may be reacting to or have already reacted to. In this broad stroke of a brush, it reflects the large crowd, the people that are moving the market. It lets you know what they want to have happen. Your first two rules out of three take place on the large chart. And when they're met, you will have the advantage of momentum and you will have the advantage of a clear path. Absolutely nothing between you and your target. And then when these rules are met, we go into a refinement process. We turn our attention to the small chart because your small chart is what the small crowd wants to have happen. And these are typically the people that are willing to fight the overall trend, that are willing to fight the momentum. And they give us this cool little pushback. We refine that one bar and we turn it into 15 to 30 bars. And we're going to refine this one, and you guys are going to pinpoint where the market is most likely to continue. It's going to allow you to reduce your risk a lot. And it's also going to allow you to increase your profit potential because we're going to use Rule 3 entries to actually buy the market on a pullback. When everything says up, we are going to buy it on its way down. And when everything says down, we're going to sell it on its way up. And you'll be able to do this with three simple rules on only two charts. So we're going to get into it. We're going to look at these rules. But before we do, I want to remind you guys the path, especially you new people. For whatever reason, people love to avoid the path. And I'm going to tell you that it starts with posting in the room, guys. This is not a lecture hall. This is an interactive class. This is a participation class. The only way for me to know that you have a question is for you to tell me that you need a question. The only way for me to give you feedback is if you present what you've done. So I'm going to give you a picture, and sorry that it's in black and white. Apparently I was in a little dark phase. My Snagit messed up. But this is how you annotate a chart, guys, to present in the room, because this is your path to feedback. 15 hours every week, with the exception of holiday weeks. My sole purpose in life is to look at what you've done and help you do it better. So in order to get the best feedback out of me, this is what I need from you. I need you to tell me why you did what you did. I always tell people write your rules on the chart, but as you're developing a recognition for the rules, you may not know them. So tell me why you did what you did. Tell me what you were thinking. And there are no wrong answers. There is no, oh my gosh, I can't believe you thought that. Well, you're brand new. You're allowed to think whatever you want. But if your thinking is a little sideways, we're going to work together to get you to not think that way. Um, there you go. And then show me where you get into the market, guys. Use both of those charts. Show me your broad stroke on the large chart, show me a refinement chart, but tell me where you got in, because one of the great things about the high probability trend trade is that your entries create lower risk. Your entries create higher profits. So if we can refine and adjust your entries to get you to where your risk is less and your profits are more, then this becomes an opportunity as well. And then finally, tell me where you get out, because there should always be a reason. The same reason, the same way you have a reason to get in because the rules are met. We're going to use these key Fibonacci areas. We're going to use momentum, and you guys are going to be able to exit at these likely to go areas. So embrace the idea, and I'll get a color picture for you guys next time, I promise. Embrace the idea that the more information you give me, the better my feedback is. And hopefully, the better my feedback is, the quicker you're going to get to where you want to be. So post those trades, post your questions, guys. You should commit to 15 pictures a day, no less than 15 pictures today. I've already taken about 25, I think. But 15 pictures a day is 75 pictures a week, and that puts you at 300 pictures in a 30-day study period, which is really pretty outstanding. Because if you take 300 pictures of something, you're looking at it, you're writing on it, and you're talking through it, it's very difficult to not move forward with the software. Nexgen's provided you a tracking sheet, a spreadsheet. This is where every time you take a trade, I want you to post it in here. I want you to use this as your trade journal. And I've opened mine up as well, because there's 3 pages. The first page is where you're going to track your trades, guys, and this becomes an opportunity for you to study. Your second page is every time you see something that makes you happy, this is your trade, this is what you want to do, what you want to repeat, maybe the rules are met, put it into your personal trade setups, and this is how you're going to develop your own personal plan. And then finally, the third page is client trades, is what it's called. And these are the client's perfect trades. And it may not be 100% high probability trend trade. It may not be a trend trade at all. But this is where an awful lot of students in this classroom have posted outstanding trades that revolve around those 3 advantages that we talked about. This page will also talk about the entry sequence on the smaller, faster chart. It'll give you plans for management. It'll talk about patterns that repeat themselves over and over. And there's also a whole section dedicated to termination conditions, because I'm not going to lie, that was my weak point when I first started. So I'm going to give you my spreadsheet. I'm going to drop it in the room right now. Please click, drag it over to your desktop, download it. But this first page becomes the most important for you, because this is where you're tracking everything that you do. And when you put your trade in there, it's going to ask you, what type of trade was it? How did you feel? What were the conditions? And then there's a notes section where after you receive feedback on it, you can put some notes in there as well and go, oh, Mark said I traded into a termination condition. I should avoid this. But if you commit every morning, pour a cup of coffee, cup of tea, whatever you do in the morning, glass of milk, some Nestle Quick, um, study what you did yesterday. Look at your trades. Ask yourself what worked. Because what worked is going to be the patterns that start to resonate with you. And then ask yourself what didn't work. And what you're going to find is that there may be a deviation. Maybe were you giving up advantages, but you're going to recognize that the more advantages you forfeit, the least likely the trade is to work. And you're going to ask yourself what felt easy, what kept you relaxed, and what felt forced, and what made you nervous. And if you go through this little routine every day, this little study, 3 to 4 minutes is all it takes. It's going to prepare you for the day, and it is going to accelerate the learning. And those are the 2 steps, the 2 most important steps to becoming a confident trader ASAP. We're going to learn the trigger line and Fibonacci rules for when it's okay to trade. We're going to do that with a high probability trend trade initially, where every indicator on every chart agrees for the trade. We're also going to talk about a medium probability trade, where almost every indicator on every chart agrees for the trade, but there will be one issue, a small issue. Your ability to read charts through the high probability trend trade is going to have you identifying this issue. Your ability to read charts is going to allow you to manage assertively. Your ability to read charts is going to have you pinpoint the problem areas, to take quick profits, to get to zero loss levels. So your study from the high probability trend trade will introduce you to and let you be successful with the medium probability trade. I want you guys simulating. Don't wait. Don't say, oh, I'll start simulating when I know it perfectly. Because, guys, you're going to be learning every day, getting better every day. And the more mistakes you make in the beginning, the faster you're going to learn. And I know that seems counterintuitive, but the more mistakes that you make and present and discuss, the faster you're going to get to where you want to be. The idea is that you're practicing the correct rules, that each and every time you pull the trigger, you have a statistical advantage. And I'm a huge fan of those two words put together. Statistical advantage. What that means is that your trade has been practiced, it has been back tested, it has been verified to win more than it loses. Um, if you are winning based on luck, if you're jumping in, jumping out without a reason, just to try and make that simulated money go up, it feels good in the moment, but it's typically a path to long-term failure, guys. Luck runs out for traders. We're going to simplify. We're going to simplify heavily, guys. Two charts, three rules, and you just need to start snapping pictures so that you can see these looks over and over so that they become easy for you. And this is what we're going to do today, guys. This is our first hour. We're going to focus on the high probability trend trade. We're going to discuss rule number one, which says that I must have strong trigger lines. Rule number one on the large chart says that strong trigger lines are a must. And if strong trigger lines are a must, you've really got to be able to establish the direction. The direction of the market, the direction you'll be trading, is defined by the color of the background. And if the background is green, we're looking for trades long. We're looking for up. We're looking for buys. And if you commit yourself to only trading with the direction, green up, red down, you're going to find yourself having an advantage right off the get-go. The background is red. We're in a downtrend. We're looking for rules to be met for high probability trend trade short. And then once we've established the color, we're going to make sure that we have strong trigger lines because strong trigger lines will provide the advantage of momentum, that first advantage that we need to look for a trade. In an uptrend, your small triggers, these are these solid lines, two lines make one trigger, will break above this one right here. It's almost too simple, isn't it, Phil? How many times have you gone against it and lost? And I did that. Hey, Jose to P. Too many. That's why I put the little question at the top. What if you never fought it? How many mistakes would eliminate? For me, it was a lot. The answer was bunches. Or as my wife would say, it was oodles. And once we decide which direction we're going, small triggers, solid lines, two lines form a trigger. Large triggers, dashed lines, two lines form a trigger. You're going to get some separation, guys. The smalls are going to break above the large. Both are going to be wide and angled in the direction of the trend. And it's this gap, this space between small and large that lets me know that the odds are favorable for the market to continue in the direction of the trend. Odds favorable momentum, guys. This is your advantage that strong triggers provide. And when you have odds favorable momentum, like scissors opening until they close, this is the best of the best. This is the most favorable look for buying on a smaller, faster chart, Fibonacci support, or in that downtrend. Smalls below the large, both are wide, angled in the direction of the trend. The space between the two lets me know that the odds are favorable for the market to continue down. This is the most favorable, the best of the best look for selling Fibonacci resistance. And guys, you're going to see these on a large chart in the form of these tails with odds favorable momentum. You're going to see those wicks, those black lines coming off of a bar. We don't trade these black lines because this is a large chart. This is a slow chart. It's a broad stroke of a brush. But each of these black lines is a retracement. It's a tiny pullback on that smaller, faster chart. Nexgen users pinpoint exactly where the bottom of that tail or where the top of that tail is most likely to form with rule number 3. So you can use this as a study tool where you can go back and circle these tails and see how many opportunities there were in the market, see how many rules-based trades there were. So is everybody good with this? Strong triggers. Separation between the small and large, wide and angled in the direction of the trend. Odds favorable momentum. Guys, this gets the ball rolling. Odds favorable momentum will cover a lot of mistakes. Odds favorable momentum will smash through areas. Odds favorable momentum is likely to carry the market in the direction of the trend. So if we have strong triggers, there's got to be weak triggers, right? Small triggers work their way inside of the large triggers. The scissors close. You can't cut if the scissors are closed, which means you can't get your work done. Small inside of the large is a weakening of the large triggers. It means anything can happen up or down. And if you just write down on a piece of paper, odds favorable, and write down anything can happen, which one do you want to put your money on? Which one do you want to risk your capital on? For me, it's odds favorable every time. It becomes easy to commit to this look when you understand that these weak triggers can precede a turn in the market. These weak triggers can create a deeper push. These weak triggers can create a bounce. You no longer have the advantage of momentum. And guys, it doesn't happen all day, every day. Rule number one is going to be on and off all day long because the market goes up and down. Momentum ebbs and flows. Strong triggers push the market down all the way to weak triggers. Anything can happen. And there's your reversal, guys, even without the benefit of Fibonacci. It creates odds favorable. The market pushes up all the way to weak triggers. If you scroll back on a large chart, and let's go to the live market, Exhibit A, and let's put nothing but triggers on real quick. Let's commit ourselves to building just a little bit of trust. Whoops, that was the wrong chart to do it on. Yeah, I'm in holiday mode, apparently. Dun, dun, dun. I'm going to put those back on. And I'm going to pull up my large chart, guys. But I want you to see this, how it happens throughout the day, and how you'll notice that odds favorable momentum isn't always a constant. But when it's there, the market pushes down, the market pushes down, and then it reverses, and the market pushes up. So you get these swings in the market. And we are going to capitalize on these little pullbacks during these swings. Right now, the larger up, the smaller down. That's the most current bar. I don't have the advantage of momentum. But here, I had nothing but the advantage of momentum, all the way up to the weak triggers. And sure enough, there was a potential entry to get you up there. So odds favorable momentum, guys. Wait for it. Commit to it. Creates a huge advantage. And then once you have it, we're going to make sure there's nothing in the way. We're going to make sure that you have a clear path. The clear path means that there's nothing between you and your target. It means that no termination conditions are present. And those termination conditions, we talked about them earlier, those are just areas that may stop the market. Those are going to be the lines on your chart. This is crude oil right now. But the lines that we're looking for can be Fibonacci resistance, Fibonacci support, yellow 1-to-1s. This is kind of a roadmap for what you're looking at on your charts. It could also be a divergence high, that magenta line that prints with a loss of momentum in the market. It can also be a divergence low, that cyan line that prints with a loss of momentum in the market. And what we're going to do is we're going to identify areas that may stop the market. Look at the bounce off of support. Look at the bounce off of that cyan line. Look how it breaks and pulls right back to it to continue up in the move. And guys, you're going to see these termination conditions. Resistance for the push down. Where did this start at? Started at resistance, right? Support, bringing it up. Everything starts with identifying the lines. And then we have to make a decision on whether or not these lines are likely to hold or likely to break. And we can do that from the tops and bottoms section here. I'm going to show you exactly what we're looking for. In this case, the market's in a downtrend. The background is red. We even have odds favorable momentum. It pushes price to Fibonacci support. So the first part of the equation to determining a termination condition is price reaches the area, because fibs are where decisions are made. They're where buyers buy, sellers sell, and where profits are taken. They're the points where in the market where the people that move the market are making decisions, guys, and we don't want to be caught up in their decision-making process. So if price reaches an area, price reaches support in this case, and all of the trigger lines remain above, you've reached a termination condition. And this termination condition says no more short trades into the area. No longer have a clear path. This is rule number 2 defined, guys. A loss of momentum creates a divergence low. The cyan line, you don't even see this until 3 bars up. So this can't be a termination condition because price didn't reach it. Price creates it. But when price returns and reaches this divergence low, all my trigger lines remain above. Now I have a termination condition. This is a giant waving red flag for you to not go short into this area. And this is what we call a pivot stop out. And this is a powerful termination condition. Price creates a line in the sand, and then when the triggers can't break it, look how the market reverses. And these pivot stop outs become very powerful if they coincide with Fibonacci areas. So this is one of those 90% moments, guys. Price reaches resistance. That's the first piece of the puzzle. None of the triggers get above resistance, therefore no long trades. You guys stayed safe and didn't get stopped out. And then the market pushes all the way down to Fibonacci support. The smalls are below the large. The large look like they're getting wide, but price reached the area. Your trigger lines have all remained above. Once again, there's nothing to do. There are no short trades to take. 90% of what you do is just spent sitting on your hands, waiting for the advantages to be present. And from support, thank goodness, you didn't get stopped out on a short trade, and it returns to Fibonacci resistance, a divergence high, another Fibonacci resistance. You actually have three termination conditions in the exact same spot here. We have one of those pivot stop outs because it reached the divergence high, and two levels of Fibonacci. This one turns the market. The pivot stop out and Fibonacci adds fuel to it. The small get below the large, and they're both wide and angled in the direction of the trend, and there's very much space between the two, and we haven't reached the next key area. So this tail right here, guys, this becomes your highest probability trend trade. That trend trade that happens after a termination condition that reverses the market. So the simple recipe is price reaches an area. If none of your triggers break, it's not broken. Hey, Kareem, nice to see you in here. And if it's not broken, sit on your hands and wait for a second. Let's see what the decision's going to be. Well, if we can't trade into an area, we can trade when the area breaks. And an area is considered broken when both the small triggers and the large triggers get to the other side of it. So if it's resistance, small and large get to the other side of resistance, and it behaves as support. And if it's support, we'll go back to the manual real quick. If it is support, small and large get to the other side of support, and it behaves as resistance. And this just kind of double duties the decision-making points. Area breaks, gets pulled back to. Notice all the triggers are below. Notice that there's odds favorable momentum. That becomes your entry to get you to the next key area. So is everybody okay with the very basic idea? If price reaches an area and none of your triggers break it, guys, sit on your hands, do nothing. And let's see if we can find price reaches Fibonacci support. All of my trigger lines remain above. Hey, Kareem, great picture, man. Nice job. For what this means to me in the moment is I'm not willing to take a short trade into this blue line. It might break. The trigger lines might get to the other side, but I don't know. I don't know what that reaction is going to be. And this happens on every chart, guys. Let's see where the NASDAQ came from. The NASDAQ started its downtrend today from resistance. There's those tails creating opportunities on the way down. Pulls back to the divergence high, another termination conditions, all the trigger lines below. And the market continues down. And guys, it has been dropping ever since. Small and large get to the other side of support. This area is now behaving as resistance. And this is what we're looking for in the beginning, guys. Just that little clear path, giving ourselves the best of the best. Resistance holds to the tick, all the triggers below, and that market continues to push down. Pretty cool. I'm going to show one more using areas, guys. And I see that somebody is sending me messages on Discord. I got a little 3 that popped up there. Just a little heads up, if you're in the room, I don't typically go check my Discord messages. So if there is something challenging, post it in the room and let me know. Otherwise, I'll check it at the. Okay, it was you, Ron. No worries. I always feel like I'm ignoring people. I can't even have a one on my messages on my phone and not go look at it. So, guys, price with odds favorable momentum in a downtrend. Everything is screaming to the downside, and it hits yellow one to ones. None of the triggers break. No more short trades. Pretty simple, right? Hit a line, no triggers break, do nothing. What's the reaction going to be? I want you to see what this area does. Sellers were selling and hit this area. They're either going to take profits or the buyers are going to come into it. Well, the buyers came in and gave you a pretty good push up, but everything, all your triggers remain below resistance. Can't go long, can't go short. Sellers fight back. Buyers, sellers, buyers, sellers. Guys, this right here is your 90%. This is the 90% where you sit on your hands, where you do nothing, where you just kind of relax and say, I have absolutely no idea who's going to win this fight. I don't want to jump in the middle of it. Ultimately, notice that the small and large get above resistance, and now it's behaving as support. You're smaller outside of the large. You have momentum. And there's one of those tails, guys. And what that is that's a potential entry for the highest probability trend trade. That's your 10%. This is what your patience is rewarded with. And you'll find that being successful day trading isn't necessarily how many of these amazing trades, whoops, you take. It isn't necessarily how many times you catch that winner and run it all the way up to the next area. Very often your success as a day trader is defined at what you don't do when there's absolutely nothing to do. What you're doing or not doing during that 90% is going to allow this 10% to really capitalize, to build wealth. So these are areas that stop markets, guys. That's your recipe in the beginning. Price reaches, no triggers, no trade. Small and large get to the other side. Look for that odds favorable, look for that tail. But there is one other termination condition that I want to introduce you to. And this one's going to be on a smaller, faster chart. This one doesn't utilize areas and price reaching it the way it happens on a large chart. We're going to use your smaller, faster chart, your refinement chart, to recognize when change is happening on the large chart, whether it is every trigger line through, clear path looking to get there, or odds favorable in a clear path. This next termination condition you'll see on a smaller, faster chart. And it'll actually allow you to see the change happening on the large chart. And then you're going to use three divergences in the same price range. Three divergences in the same price range may reverse the market. It may create an untradeable bounce. Divergence is a loss of momentum. And divergence is true when the cyan line prints from a low or a magenta line prints from a high. Don't worry about the negative numbers. They're a byproduct of the calculations to make those print. Divergence is either true or it is not. When you get three divergences, three losses of momentum in the same price range, it may terminate the trend. It becomes more powerful, if you guys remember rule number one, when your trigger lines find themselves in that anything can happen state, those weakened triggers and three divergences. Becomes more powerful still for you guys that love technical patterns. When the third pivot is higher than the previous from a low or lower than the previous from a high. So you're going to use these to recognize change, guys. You're going to see a market that may be turning, and you'll be able to see it before it turns on the large chart. You're also going to use these to help manage trades. If you take the perfect trade, if you get in at that best of the best spot and three divergences print, it becomes this beautiful red flag waving in your face saying, let's cut ties, let's take some profits, let's get out, let's wait for the advantages to come back. And you're going to see this look at a low or this look at a high at times when your large chart simply can't give you that information fast enough. So guys, those are termination conditions. That is rule number two. Remember, it starts on the large chart, and rule number two is the one that gives you the clear path. And when you have a clear path and you have that odds favorable momentum, the large crowd has done their job, guys. They have literally defined the direction of the market. They've given you odds favorable momentum. They've made sure that there's no places for a bounce. And now we're going to let the small crowd do their thing. We're going to let those yahoos that want to fight everything start the fight. And what we're hoping, fingers crossed, is that they're going to give us a pullback, a small retracement in price to an area inside of favorable large triggers on the smaller, faster chart. We are literally going to let them fight everything and push us to the best of the best spot. And rule number 3 has us using a limit order. You're going to wait for the market to come to you. It's pretty outstanding. Um, and you're going to wait at an area. Those areas can be Fibonacci support or resistance, yellow 1-to-1s, or a midband. But here's the key, guys, is you want those areas to be inside of what we call favorable large triggers. And this is for you new users because it's going to give you the least amount of risk. Favorable large triggers means that on your small chart, on your refinement chart, on your entry chart, both the large triggers and the synthetic triggers are wide and angled in the direction of the trend. They should be overlapping one another, like two snakes riding piggyback. Because when the large and the synthetic are one on top of the other, and it doesn't even matter which is which, when the two large triggers are one on top of the other, it creates the smallest window of opportunity. And the smallest window of opportunity is the absolute smallest point where the market is likely to continue. That key concept from chart reading. Our entries come from areas inside of those triggers. So rule number 3 is the refinement process. Rule number 3 takes that large chart and breaks it down into 15 to 30 bars. And this is how we pinpoint our entries. So when the large chart is in an uptrend, it says we have odds favorable and nothing in the way. This is going to be the look on your small chart. Both sets of triggers should be strong, smalls above the large, large and synthetic, wide angled in the direction of the trend. You're looking for an entry. So you're identifying the areas that may fall inside of these trigger lines. And remember, these are moving averages. So as the market's moving, so are the trigger lines. So if they're up and strong, they're like sharks about to breach. They're going to swallow this midband. They're going to swallow this fib. So we're looking for fibs, midbands, yellow 1-to-1s that could end up inside if we get a pullback. And then we have to wait for the pullback, for the small crowd to do their thing. And that starts with a reversal bar. So everything says up, and we want the market to come down because, well, we're that good. And at the time of the reversal bar, you're going to create a window of opportunity, guys. And that window of opportunity extends from your highest point of support for a long trade to your lowest point of support inside of favorable large triggers. So large triggers, from the highest line of the triggers to the lowest line of the triggers, we want our areas to be inside. And this is a window. This is a range. This is the point where the market is most likely to continue. You're going to activate a limit order right at the very top of that window. And you're going to sit on your hands and you're going to wait because you're not in control. Somebody else is. But if it comes back to that highest point of support, and why do we do the highest point of support? Because the large chart was screaming to the upside. Because the large chart had absolutely nothing in the way to create a bounce. We don't expect that small crowd to be able to do a lot of damage. So when the reversal bar starts, you are identifying from the highest point of your trigger lines to the lowest point of your trigger lines. See how they came up? And you're creating a window, the point where the market is most likely to continue, from the highest point of support to the lowest point of support. And guys, this is your window of opportunity. This shaded spot, whoops, not shaded, I'm trying to shade it. There we go. This white shaded spot is the point where the market is most likely to continue. Can you guys give me a why if you're okay? Reversal bar prints, identifying the areas inside of favorable large triggers, and if price pulls to that highest point, a tick or two above, you're in a long trade. You're in a long trade with the advantage of momentum dictated by strong triggers on the large chart. You're in a long trade with the advantage of a clear path and from entering where the market is most likely to continue. You've created a window, guys, and you have to be prepared that the market may push to the bottom of the window. It's okay. Don't get scared because it's still where the market is most likely to continue. But one of the advantages that Nexgen provides is if you understand where the market is likely to continue, you also understand where the market shouldn't go. And we're going to put a protective stop right there, 4 or 5 ticks outside of the window of opportunity. And we're going to make sure that if the market pushes beyond, it hits a stop. It takes us out of that trade. And guys, anything that wins 70 to 80% of the time has to lose 20 to 30% of the time. And you got to be okay with that. You've got to understand that small losses are a normal part of a positive equity curve. And then it's just a matter of putting it all together, guys. This is a trade that you should never miss because this is a trade that 70, 80% of the time makes that target, gets in, and even when it begins to go, you're going to reduce risk below the reversal bar. Guys, this is your first 20 days with Nexgen. This is getting into the market and understanding where it's likely to continue, focusing only on entries for 20 days, focusing only on the best of the best. And I'm going to give you a checklist right now. Never had anybody use this checklist for entry and do worse than 70% if they could mark yes on all of it. This also gives you something to write on your chart. These are the rules I was looking for. Write these rules, draw an arrow. What is odds favorable? Write it down, draw an arrow. The checklist, I'm giving you the same one in picture form. A termination that creates a full reversal, strong triggers, weak triggers, quick study guide. No clear path, there's your clear path. There's the window of opportunity, talking through the order of operations, guys. I'm giving you both of these checklists in. Print the first one out, put it on your desktop, have something, checks and balances. Take the second one, look at it every day before you start trading. And then finally, the goal for all of you is to create a plan. To have a very specific set of rules that are going to get you into the market, to have a very specific set of rules that are going to get you out of the market. As the brand new user, it's going to be difficult to write a plan in your first week, right? So I'm going to give you a plan. I'm giving this to you, and I'm also giving it to you guys that aren't hitting your goals yet. Maybe you need to back up a little bit and simplify. And this is a stepping stone in your learning journey, and it's designed to optimize your chances of success with the high probability trend trade, with that medium probability trend trade that we call a 50-50 trade. And through simulation study, class feedback, participation, guys, continuous, you're going to get to where you want to be. You're going to develop a plan that suits your needs. You're going to take your ability to read charts, and you're going to find patterns that really embrace your risk tolerances, that are easy for you to spot. But this keeps you focused and optimizes your chance of success as a brand new user. And it starts with, and this is the same thing that Phil and I were chuckling about earlier, is never fight the large chart direction. Never fight strong triggers, guys. It's financial suicide. It's such a horrible idea because the large chart's what everybody in charge wants to have happen. Take 20 days, or take 2 weeks, right? Take 10 days, 10 trading days to do nothing but find entries, to do nothing but get into the market at the correct spot where it's most likely to continue, to build trust, to go back, to study those entries. Those tails on the large chart are a great way for you to go back historically and study entries because when the large chart is strong and has a clear path, if you circle that tail that we talked about, it should line up with an area of support inside of favorable large triggers for a long trade. Or it should line up, let's see if we can find, with an area of resistance inside of favorable large triggers. And this becomes a study tool for you. And we don't trade tails. They're long gone by the time they're formed. We trade pullbacks to areas inside of favorable large triggers. So you can use this tail to go back to be angry with this classroom and prove me wrong. Tell me that it doesn't work. But this is going to build that repetition. Take these pictures, get them into your spreadsheet, and just work on entries. Get yourself in the best spot. And then that very mechanical approach to entries we're going to incorporate into our management. And this very straightforward approach, if then for new users, tends to be the best approach. Everything is predicated by the best entry, by the area inside of favorable large triggers, getting into the market as it pulls up to this resistance inside. And the only thing for you to do once you're in the market is put your stop where it shouldn't go. And there's really nothing else to do. There's only two options, guys. You're either going to get stopped out, normal part of a positive equity curve, or it's going to give you a reversal bar. So this is where the if-thens really kick in. If the market gives you a reversal bar, then you can reduce your risk 2 ticks above it, or in a long trade, 2 ticks below it. Nothing to do. You're either going to be stopped out or it's going to hit your first target. And your first target is designed to build confidence. It's only $100, guys. And with a large chart that has odds favorable momentum and nothing in the way, you'll find that this $100 becomes pretty easy to hit more often than not if you're following the rules. You're also going to move your stop to break even, which means you've been paid and there's no risk. And it makes it easier for you to trust the large chart. It becomes easier for you to let the large chart lead the way and hold that second contract for the second target, which is a measly $200 off in the distance. And this is designed to create confidence through the memory of success, guys. This is designed to get you in quickly, to get you in at the best spot, and to get you paid as soon as possible so that you feel good about it. Every great entry with conservative management creates an opportunity for study to know when it's appropriate to hold for bigger moves, when you can take that momentum, you can take that clear path, and your chart reading identifies where the market is likely to go. This becomes an opportunity. And what you'll find as well is if you post in the room and you show me a beautiful entry with odds favorable momentum and an exit where everything is railing to the downside, it becomes an opportunity to help you build a management plan that keeps you in the market for bigger moves, turning those $300 moves into those $700 moves. And guys, this is your focus. Your first 30 days with Nexgen are all about um, consistency, all about becoming a chart reader, all about identifying momentum, about identifying clear paths. And let's see if the S&P gave us one of those odds favorable momentum tails. Because we can go back and study, right? We can take off all the noise and let's see just how effective momentum can be. I think that may have been yesterday. I scrolled back a little bit. But what did it look like? Pull back to support right inside of favorable large triggers. And if you move up a little bit, right at the beginning of momentum, and this was in the middle of the night, you may not catch this, but let's see what these three look like. I scroll over on my smaller chart, pulls back to resistance, right? Pulls back to resistance. There were some challenges here, but the patterns hold true, so you can start to recognize these patterns over and over. You can start to get an idea of when the market, has odds favorable momentum. When the market is pushing down, let's see what this one looked like. This is the S&P. This was 50 minutes ago. It pulled right back to resistance right there at those large triggers, and it's still working its way down. So um, large chart leads the way, guys. Large chart tells you where you're looking. Large chart gives you the idea of what it is you're looking for. Small chart does nothing more than refinement. Your job is to simulate. Your job is to take a lot of pictures, to post them in the room, and to talk to me every opportunity you get and ask your questions. And these patterns don't know what market they're trading, guys. Look at this. Oh, I love this. Crude oil is the best teacher ever. It pulls back to resistance right there inside. 5 ticks out, keeps you in the trade, but 3 divergences in the same price range tells you that it's time to cut ties. And look what the market did after the 3 divergences, guys. Pretty outstanding, right? Patterns repeat themselves over and over. Looking for an easy one. Holiday trading changes dynamics a little bit, guys. It really does. Let's look at this one. This was right in the middle of the night. But even the people that don't sleep tend to understand patterns. And that's about as pretty as it gets, isn't it? Odds favorable, nothing in the way. There's a tail right to resistance. And guys, if you took that trade, momentum said carry it down all the way to blue Fibonacci support. Um, And that's what we're going to do all day, every day. Price reach resistance, absolutely no trigger lines break. Can't go long yet. Don't have a clear path. My large triggers are down, my small triggers are up. I don't have odds favorable momentum. My first two advantages are non-existent, which means that my best bet is to sit on my hands and do nothing, to hang out, to wait, to relax, enjoy the ride, and let them do what they're going to do. So guys, that's the first hour. Are there any questions about the high probability trend trade? Michael, that's one of my least favorite comments. Not my day. Why not? Let's find out why. Whoops, something went wrong. Let's try it again. Order stops. Okay. So you entered the market after three divergences in the same price range, right? And got stopped out. Three divergences said don't do it. You did it anyway and you got stopped out. Three divergences still said don't do it. Weak triggers. You took a trade not from an area. And then divergence printed, that's your fourth, and you got stopped out. So Michael, and that's good. I'm glad that you put not your day. Because let's look at this with two divergences. I love doing this. And guys, I'm telling you right now, this is how you get better. Michael, you are an absolute rock star for putting in this in there. Michael, if you took the best entry, if you took the first entry, if you took the no hesitation entry right here, no doubt in my mind you stay in this trade, right? You're in at 19. At 09, you made $100. And you might be break even. Third divergence prints, you're out at right about 14, 15. So what ultimately is two losers with just a little adherence, right? Keeping it simple is actually about a $150 winner. And this is where you're going to get. But in the moment, we don't always notice everything going on, right? We don't always notice three divergences. But do you see the difference? Because you went odds favorable, and it pushes down. There's your third divergence in the same price range. But even if you kept your stop in place, it still pushes you down to that third right there to exit. And this one is just, that's the I hope it goes, and I'm kind of mad that it seems to be going without me trade. Does that make sense, Michael? Awesome. And I'm telling you, every time you post in the room, guys, there's an opportunity to get better. So I'm going to take a quick break. I'm going to stretch my legs. Vengeance is yours. I hope you were shaking a fist when you said that. Um, I'm going to come back in just a few minutes, guys, and we're going to get into that next hour. The next hour, I'm going to look at all your charts, guys, and we're going to keep coming back and looking at the market, talking about whether or not advantages are present. We're going to talk about what we see. Right now, I see odds favorable momentum, but I see an area that isn't broken. 77.32, all my triggers aren't above it yet, which means this is one of those 50-50 trades. This is an area that utilizes momentum to try to break an area. There's a window of opportunity, not a high probability. Um, Basically, Craig, in the same price range, don't overthink it. If you can look in the same area and see the lines, yeah, like that's the same range, right? But we can say that, let's see if we can find an example. These three aren't in the same range. This one's all the way down here. So what I like to use, Craig, is the same idea that if triggers show me broken areas, triggers can show me broken divergences. My triggers start getting to the other side of this divergence. It's broken, rear view mirror, not even worried about it. But you'll see when they start happening in the same. Whose rules, Pedro? Mine or yours? From the simple plan? Well, Nexgen gives you a set of rules to talk about. So let's do this real quick. Check this out. Let's take a picture and let's go through it and annotate it. And I'm doing this because I don't call trades. So I'm only going to talk about whether or not the rules are there, and I'm probably going to do it slow enough so that the market already does what it does. But here's what I'm going to do is I'm going to literally take this spreadsheet or this checklist, and I'm going to drop it on here. And it's kind of big, so let's do this. Let's make it a little bit smaller. So work through it with me, Pedro. And everybody, please participate. I like it when you do. Do I have odds favorable momentum on the large chart? Absolutely, right? Do I have odds favorable momentum on the small chart? Small outside of the large? I love that. No divergence on the 5-1 chart. None present. Am I coming from a good top or bottom? Am I coming from a termination condition that created a full reversal? Guys, I don't have any areas here at all. So here's my no. So I've got 3 yeses and a no. Does this fit the simple plan? Not so much, right? Because I don't have a large chart termination reversing it, which means that this market may just want to continue down. This area may not be broken. And then let's look at the other side of it. It's a weak bottom. I did have 3 divergences, letting me know that there may be a higher push up. It's a termination, but it's not a large chart termination. So it gets a little gray. Sometimes, as you grow with the software, is you're willing to forego a good top or bottom if there's no divergence, which means that you got in at 33 and you've already had your reversal bar, which means your risk is at about 31. You've got 2 ticks of risk, hoping that the market reverses. But guys, this is important because, and I can't say this loud enough, this is your best chance for success. Give me a why if that makes sense, guys. This is the one that's designed to optimize when an area hasn't broken yet. You will craft a plan that suits your needs once you get some reps in. So Pedro, does it fit the KISS plan? Absolutely not. Would I ever miss this trade? You couldn't pay me to miss this trade. Because of the strength of the triggers, because of the 3 divergences on the small chart, and because I've got a tiny little window of opportunity with no divergence and crazy strong triggers, I'm going to play the momentum for the win game. And notice how I waited till this trade was done, until it already happened. All day long. But then the flip side of that is I'm still watching, right? Until this area breaks. Oops, that's the wrong indicator. Until my large triggers get above this area, Pedro, I'm being cautious. I'm watching for divergence on my smaller, faster chart. If I get it, I might exit the trade. It depends. If I don't ever get it, I'm going to let it run up to 77.67. That's going to be my target. At this point, from 32, 33, I've already been paid. I've already made money. I'm probably break even. And I'm waiting to see if change happens. Does that make sense, Pedro? Does that help? Guys, I'm telling you, what I give you in the beginning is the most bare bones, nuts and bolts approach that you could ever take. It is the simplest of the simple. Very few people stay there. Very few people stay there. But with this much momentum and three divergences and no divergence and super strong, doesn't it make sense if a semi is traveling 100 miles an hour up the highway? It takes a second to hit those brakes, doesn't it? It takes a second. Momentum, guys, momentum is such an advantage. Such an advantage. And then we'll see what happens here. I'll leave you guys with this one. I'm going to go take a couple minutes. I need to go grab my water. I left it in the other room. If you have questions, please post them in the room. If you have comments, concerns, if there's something that you would like to discuss, post them in the room. When I come back, I'm going to start looking at the pictures that you guys have posted, and I'm going to relay them all back to each and every one of them. In some capacity, I'll talk about momentum, clear path, in an entry area, not because that's a necessity, but because this is an educational room, which is why I want you guys to tell me what you did. If it's outside of the high probability trend trade, tell me what you did, right? Keep it educational. Um, I know nobody's a huge egomaniac, and you're not trying to show off. But if you're posting trades that don't make any sense in regards of momentum, a clear path in our entry area, even if it wins, what you're doing is you're not offering any value in the education. So tell me why you did what you did, right? Don't make me study your charts. And there's divergence on a 50-50 from a bad bottom. Let's see how it reacts, guys. Pretty cool. Hey, Ace J. I'll be back in about 5, guys. Stretch your legs. down. Sorry, Cav. I almost disconnected the room. It took me a second. Guys, I took this picture. I want to use the same checklist. And everybody's like, Mark, I don't want to miss trades. I don't want to miss trades, right? Yes, yes, no, no. Zoom. I'm telling you right now, this is designed to keep you out of trouble. This is designed to make your life easier. This is designed to keep you out of the most lost trade for new users. Use your checklist, guys. Follow your rules. Pays dividends. I'm going to scroll up to the top of the class. We're going to start looking at the trades that you guys have been posting. Let's see who got us going. Cav got us started off this morning. And he says, Mark, I triple dog dare you to be able to read my tiny little charts. Just momentum. Everything says down. You hadn't reached the next area. You get in, take a chunk, take a chunk. Cav, nice momentum trade. Not a high probability, but you're trading with direction. You're trading with momentum. And then Dwight, you have strong triggers. They cleared the path. You're looking for that area inside of favorable large triggers. Did it get you? Is there a follow-up picture to that one? Sometimes it doesn't come back for you. And then Cav, everything says up from a pivot stop out. Not really a pivot from nowhere, is it? Cav, let's talk about this one. The smalls got through a little bit. The large definitely didn't. Right here, divergence low, pivot stop out. And man, it reverses it. Just a little bit of overrun. And look at that. 1, 2, 3. You're going to love this. 3 divergences. Craig, third one's higher. But do you see how this little bit of overrun kind of gets verified and validated with the divergences, guys? This is a great way to use it. Because when you have momentum, sometimes the market overruns. So yeah, Cav, that was a termination that with a little bit of overrun verified. So what you did is you took the odds favorable, everything says up, you've got one pink line to contend with, and your entry's beautiful, and you get paid. Nicely done, Cav. That trade was even better than you thought it was. Let's see who's next. Got you again, Cav. Strong triggers to the upside. Both charts placed a trade inside the large trigger, the mid band, and the 1-to-1s below with my stop below the 1-to-1s. Reach your target. Everything set up. So you got in here, held through 3 divergences against everything. And got out up here. Cav. Okay. So you were in at 0450 and you gave it over $800 worth of risk with 3 divergences from a fib, from a bad bottom, on what was probably a 50-50 when you got in? All right. And that fits your plan? That would be my only concern. Man, I appreciate that you got paid, and I think that's awesome. I think you got lucky, my friend. I think you were like, man. Have you heard the story of the guy that hung on for dear life back when Nexgen was just a baby? I remember when this happened. I'm going to find a hang on for dear life, and let me just show you what happened. Where's a big run? Here we go. We'll do this. So, but it was flipped. So let me see if I can find a down run just so that there hasn't really been one in crude oil, has there? There we go. We'll do this. So back in, I want to say it was the 90s, right around, or maybe early 200s, and the S&P dropped hundreds of points. And my brother knew a guy that went long, and the market came against him. And he said, well, there's no way this market can continue down. And he went long again. And it continued against him. And he said, well, that's impossible. I'm going long again. I'm adding contracts. I'm adding contracts. I'm adding contracts. And he did it again. And he did it again. And he did it again. And again. And again. And again. He was hanging on for dear life because there's no way the market could go against him. That's what he lost that day. From that, holy shit, let's just move all the stops out of the way and hope. And Cav, obviously yours wasn't that extreme, right? But this is a true story. And you can do whatever you want always, right? You can always do whatever you want, guys. I don't tell people how to trade, but I do feel compelled to tell you that holding against three divergences and a trend change and an area of resistance makes your 126 doing the same thing look like child's play. It stings, doesn't it? Isn't it awesome that now you have, and the cool thing is, Cav, just something to think about. If you exited with the third divergence and you let it come all the way back to Fibonacci support, a close on the correct side gives you a low risk, bigger profit move, right? So like three divergences print, you're just like, oh, I'm going to let it get down to the next area and then look for an entry. Um, and it's hard in the moment sometimes. It really is. But this is, you've lost over 1 million in a day. I can't imagine that being. I can't imagine how that feels. So just something to think about. When the three divergences print, oh, I've got a great picture for this. And thank you for posting. And I'm not beating up your trade at all because large chart led the way. But we're so good at managing our risk. And this looks almost exactly like it, right? If you're in a trend trade, you get a third lower divergence, get out. And then when it comes down to where it's supposed to be, let it roll a little bit and look for that next entry. And it creates an advantage and it helps minimize some of the shenanigans in the market, which hopefully makes it easier for you to get paid. Great picture, Cav. Thank you for sharing it. And I know it sucks when you post a picture and Mark's like, dude, what the heck? And then, Michael, we talked about yours. Three divergences creates challenges, right? Joel, let's see what you did. Man, I just don't feel like that was a beating the crap out of you. That felt pretty loving to me. Joel, I know. Higher divergence, large triggers down, small triggers up, directly into termination. Joel, you just got bored, didn't you? Happens sometimes. Nothing set up yet. Deer in the headlights. Man, it happens. My thing, I get married to trade sometimes. Have you ever, and guys, I know that it's going to be a slower day, so I'm going to talk a lot as much as I can. And I think that we've all done it, right, Joel? So you see the divergence, and then you see the higher divergence, and you're like, oh, that's pretty good. And you see your range chart kind of turn, and you're thinking, man, that's cool. And then you're like, oh, look, an HVA line. And my triggers turned, and that's awesome, but you forgot that it didn't come from a good bottom. And then you're so married at this point, somewhere right around here. You're so married to this long, and I've done this, which is how I'm describing it so easily, that you absolutely forget that it's a termination condition, that it's a termination condition, that you don't have favorable large triggers because you get caught up on one other set of information and then you're committed 100%. It becomes your ride or die. You're like, this is my long. No matter what anybody says, I'm going long, damn it, because 10 minutes ago I said I was going long. I have lost all sorts of money with this one, Joel. You are completely human. Terminations, guys. Terminations for the win so often. And you even had one on this chart coming into it. So, good stuff. Thanks for posting, Joel. You guys posting is what gets us better. The conversations that we have based off of what you see is what gets us better. And then, Daryl, you took that 50-50 with no divergence. Great look, right? And you knew it wasn't a home run, so you got paid quickly. And you've got very minimal risk, 5 ticks. Daryl, do you have a picture of your exit? I love the entry, man. Sniper. It didn't get much higher than that. I hope you didn't give any back when divergence printed. And then Carl. Pivot from nowhere, directly into support. I love it. That's a termination condition. Everything rolls at the HVA. Yeah, Carl, you want to know a secret? Got out break even? That's perfect. Break even's perfect. Carl, I took the exact same trade. And do you know what my analysis was? Do you know where I screwed up? Is this chart, there was a fib there, I thought, on mine. Smalls were below the large, which is okay. Had the fib here. I took a shot, and I took just about the same exit. I love it. It's rules-based, Carl. It's termination. It's everything rolls. I even had large triggers up here. What size range chart is that? Is that an 8 range? Oh, happy Thanksgiving. Let me see if I can find my version of that. Because I know I took a picture. Um, I believe that's it. My large triggers were up. My termination was great. My smalls were up. My trend had changed. Everything. I took that HVA, Carl. Same trade. And I think I lost 3 ticks on it. But your 8 range looks a little different than mine. I think it's a great shot. That's an HVA trade. And if it goes all the way up to Fibonacci resistance. That one just didn't go. Yeah, 3 ticks. I'll risk 3 ticks for that all day long. And then Joel, we saw that one, didn't we? Nope. There's that 50-50. If you took the first one, Joel, Rockstar, because you took the second one against the divergence, it got you. Catching the first one, guys, catching the best one is always the best. We saw that earlier with if you caught the first one with the clear path, you made money. If you waited for the second one, it didn't work out. Steve B, same entry, beautiful. And then you took targets when it came below the small into the large triggers. Nice exit, Steve. I like that. I actually like that a lot. It tried to push up and then came back below the smalls. That's kind of, I haven't seen that before. That's clever. Nicely done. And then Ace J. This one you had room. This one you had room. This one you were all out of room. And it did ultimately break, Ace. Not gonna lie, that's terrifying to me. I'm glad it worked. I am glad it worked. But when I get into three areas of resistance and a divergence high and my smalls are coming back, whew, I think, guys, I'm going to take 5 minutes and go grab some Tums. Oh my gosh. Do you see why that one's a little scary? At least this one you had a 50-50. Even this one you had a 50-50. This one is just, I mean, you didn't even get a bar above. I'm glad it worked, man. Momentum for the win, right? I told you guys it will cover mistakes. Momentum is an outstanding camouflager. And then DJ, good top and bottom. Are you with me, DJ? Cool. So when we talk about good tops and bottoms, um, let's use a simple recipe. So the same recipe that I use for termination conditions. If price reaches the area and none of the triggers break, this is the recipe that sets you up for a good top. When this termination creates a full reversal, now I have a good top in place. And this good top is awesome right until we hit a termination condition. And then this termination, no triggers through, that creates the full reversal. This is a good bottom. Termination, full reversal, good top, right? So we're looking for our opportunities in the middle. And guys, I think that this is a good lesson. And I'm only going after this one, DJ, because you put good top and bottom, which leads me to believe that there may be a little misunderstanding. Um, Up here, you had resistance, the triggers don't break, and it reverses. I like this good top, right? I feel pretty good about it. Right here, there's nothing that bounces the market. There's nothing that stops it. It's from the middle of nowhere. It's just weak triggers and a loss of momentum. Do you see how this isn't a good bottom because it wasn't a termination that creates that full reversal? And then this 59 fib should be somewhere over here, which puts you into a medium probability trade. You're not running synthetics, but if you were running synthetics, right on. If you were running synthetics, what you would have noticed is that you had a red line right here at 59, which is this fib right here, which means that this is in fact a 50-50 trade. Does that make sense, DJ? This is an area with the potential to break. But since it's not coming from a good bottom, it's less likely to break, right? But your entry is absolutely perfect and there's no divergence and strong triggers. You took the best stab ever at this entry from a bad bottom. Does that make sense? Did that kind of all piece that turns into a great top and bottom lesson? But you took the absolutely best shot. And then if divergence prints, that's where it becomes a management opportunity. And this was yesterday afternoon. So it was probably moving 32 flavors of slow back then. How'd that one turn out for you? Did it pivot and drop? Cool. So it did go up. Amazing. I'm telling you guys, momentum, no divergence on a 50-50, it usually gives a good push. Nice job, DJ. All right, Pedro. Odds favorable. Everything says up. You've got no support one-to-one midband within large triggers. Where would you put my limit entry? I love it when people ask me that. Just trying to get more precise with your entry. 4560, 4560. So this picture at 1303 is right here. So let's go through a couple things on it. Um, and I think that you're asking about the entry because everything continued up, right? We came from a termination, odds favorable. We are into a termination condition for sure. This fib right here doesn't have any triggers through it yet, which is okay. So if we're looking, I'm going to try and make this a little bigger, Pedro, because it's a good question. It really is. Um, so where is your window? Your window extended from the top, right? So that is the top of your window. But because you're into a termination condition, look at the reaction it creates and look how it pushes beyond everything. That becomes problematic. So what you're asking me, and not in any sort of malicious way, is where do I put my order to trade directly into a fib that I don't know if it's going to break? So how do I break rule number two? How do I pick my entry? For me, if I'm going to break rule number two, if I'm going to rely on that momentum, I want at least a level of confirmation. Does that make sense? I might wait for my first reversal bar just in case this termination gives me a little further push. Um, I might wait for a close on the correct of the small triggers just in case the termination condition gives me a little push. Because what happened is that termination condition probably would have pushed you to being stopped out anyway. Does that make sense? So when I know there's a problem there, I can say something clever like, if a reversal bar prints, I'll take a shot and manage it when it gets back up to it. And if I never get that reversal bar, if this termination does what so many of them do, well, then I never actually take the trade. So that's not a high probability trend trade look, but what it is it's maybe insisting on a little bit of confirmation when things aren't perfect. Let's go see if we can find an example of that. If I got three divergences, right? It looks good over here, but three divergences print so that I know it's a termination. And I'm wondering, do I take it at the mid band? Do I take it at the mid band? Does this make sense? Are you following me so far? And you say, I know it's a termination, and I know that there's a mid band inside, and I know that this is a pretty good look. Let me wait for a level of confirmation. Let me wait for some sort of reversal bar or something. And you never get it in this instance. So rather than hoping into a termination condition, you wait for that confirmation. And when you never get that confirmation, you end up having no trade. Pretty cool, right? And then with divergence on the 50-50 from a bad bottom, at least you have established risk with a reversal bar, but then divergence prints again and it pushes lower. And it pushes right into a fib with no triggers. Large triggers never bend. And now we just come back. Termination, reversal, odds favorable. We can skip all the nonsense in determination conditions and just wait for opportunities where all the rules are met. I hope that was a little helpful. I think that reversal bars for confirmation are very underutilized. It's easy to take trades that aren't great trades, right? It's easy to take trades where you know something is wrong. Um, and I was talking about this is my best entry always when the conditions are perfect. Doesn't that entry establish my risk and get me pushed in the right direction? I love reversal bars on iffy trades. I love up bars when maybe there's a challenge in front of me. And that's my own personal preference, and it's not a next gen rule. Next gen rules, Pedro, say don't take the trade. That KISS plan says don't take the trade, but a little bit of chart reading and a lot of momentum. Odds favorable, clear path, highest point of support. That's really it. Isn't it? One line inside of favorable large triggers. It may come back. It may not. Weak triggers, divergence, divergence. Look how it pushes beyond the area inside. Weak triggers, two divergences, weak triggers. It pushes right to resistance with every trigger line below, but your small chart told you, pump the brakes. We're probably going to push higher. And then the S&P, support breaks, behaves as resistance. Market continues down. Pretty cool, right? Over and over. Over and over. And sometimes it's just not your money. Let's see. I think we've got more. Pedro, are you good with that answer? Sometimes people don't like my answers, and I'm totally good with that. I'll just try to rephrase it. Yeah. I had a gentleman, he hated my answers because he spent a lot of time looking for things outside of that KISS plan. And he didn't care for them. He didn't like my answers because they didn't line up with what he thought. And we had amazing conversations and we're able to line up. And conversations fix everything, guys. It's so true. All right, Cav, pull back. Awesome look. Let's go to the large chart. Large chart says down, screaming. Everything says go. You let trouble break, pulls back to it, take it to the fib. This right here is beautiful, Cav. Guys, look at this. His large chart said go, so he didn't exit. He kept his stop behind the areas inside of favorable large triggers and took that bounce. That should have added those three back on, Cav. Beautiful trade, my friend. I love that. Do you see how that's an add-on opportunity? Get in four, get out three. Hell, put a couple back on. Killing it. I'm going to give you 4 for 5. I'm taking away points for the crazy hold. But it was your hold, so that's awesome. I've got a picture of this same scenario in my spreadsheet. I want to show you this one. It's actually labeled in my spreadsheet as trading goals per Debbie. Getting in, pulls back, get in again. Pulls back, get in again. And making that money all the way down. And Cav, that's probably your next step is grabbing hold of that next one. Grabbing hold of that trade there. And that's hard to do sometimes. Takes a minute. And then Joel, struggling on your picture. Hold on just 1 second. There we go. Beautiful. Not a clear path. I love it. Cav, just do what you're doing. I can tell you right now for Apex, because I like to talk about Apex because I think that there's some things that people forget about going into it. Let me find the picture of that trade. So this particular trade, Cav, if you're in here and you're up and it pulls all the way down here, if it takes you out, it's going to blow your account. You can't give money back like that on Apex because they have what's called a trailing threshold, stop loss. So if you're up $500, yeah, so be aware of that going into Apex. That'll ruin your day. All right, Joel, are you with me? All right. So help me out just a little bit here. And I love accountability. I'm going to take a picture of your picture, my friend. This fib is this fib, right? So we can say pretty certainly that price reached Fibonacci support. Steve B, take care. And divergence printed. And I'm not knocking the trade. I like it. You're coming from that term and everything's railing, right? Momentum for the win. Your sniper entry creates virtually no risk, which is beautiful. And this is what we're talking about, um, potentially trading into a problem. And then your management says that you recognize that problem. Great job, Joel. And I say this because I think it's important. When you know what you're up against, when you know where the problem is, it puts you in that management mindset. It puts you in that mindset to feel like, all right, I'm going to have to be assertive at this spot. And then 13-2 clear path, 5-1 entry, areas inside. No, it's not a problem. Did you know that it was a termination condition? Okay. Then don't write clear path. Because what this does for your brain, Joel, is it tells you that this is okay in any circumstance, right? Look at your range chart. To the tick with stranded sellers all day. Divergence directly from the fib. A fib with absolutely no triggers. Type on there, I'm trading into an F in termination condition, but because of the momentum, because of the tiny window of opportunity, I'm taking this mofo. And I'm going to manage it when I get back to it. Because then it gets you in the right mindset. Awesome. All right, so small. So Kali, it's a trailing threshold. Let me go through this picture and then we'll talk about it. I like it, Dwight, but not the best momentum, right? And as long as you know that, as long as you know that it's not the best momentum, you can manage accordingly. You do have a clear path, without a doubt. You're in a crazy strong downtrend, but it's been that way for a while. It's getting tired. You can see it in the trigger lines. They're working their way inside. So I like it. Divergence print, something like that. Just be aware. And then let's see. So it looks like it got you, and now we're two divergences, weak triggers. Good stuff. Hey, Ron, take care. Yeah, be thankful for Nexgen. So management opportunity, right, Dwight? Because you had the weak triggers, because it's exhausted, and now we're seeing multiple divergences. Good stuff. But that clear path is true, and we're pulling right back to a fib. Just saying, be on your toes. Missed you by a tick. Rats. Rats, rats. All right, Collie, so let's talk about it. Because guys, we've gone through all the pictures. So and there is a video, and it's a great video, and it does make it easy, but why not talk, right? This is what class is for. So you start, and let's just say you start with a $50,000 account, right? Your trailing threshold is $2,500, meaning that if your account reaches 47,500, it liquidates or liquidates. Liquidates. Are you with me, Collie? So what the trailing threshold means is, let's say that you're in a trade and it goes up $300, right? So it had your account, whoops, that's 3,000. It had your account to 5,300 with that open equity. And let's say that you get stopped out break even. You refuse to take profits, and it comes back against you, and you're out break even, and your account's still $50,000. And you're like, well, I haven't lost a thing. What Apex is going to do is they're going to calculate your new trailing threshold. They're going to take your highest point of equity and subtract that 2,500. So now, even though your account is still $50,000, your trailing threshold is 47,800. Does that make sense? So now you've got a $2,200 threshold stop loss, not 2,500. So if you're the kind of person that lets it run, let's say you take another trade and it goes up to 57 or, 5,100, you're up $1,000. No matter what you take on it, your trailing threshold is going to be, what is that, 49,250? So it literally follows you. So your trailing threshold will be based off of your highest equity. So what that means, if you're trading Apex, and this is my 2 cents on it, is that if I hit trouble, and I'll show you how I did it this morning. Let me find my short. So I took first profits down here at the pivot stop out, but with all the momentum, I gave it the opportunity to run. But because I'm not willing to give back a couple $100 with Apex, I said, all right, an up bar takes me out at this trouble spot. Because I already had one divergence, I'm at 1-to-1s. So rather than putting my stop way back here, I choose to just get out. I'll re-enter if the conditions are right. But I'm very much in a TTFM mindset with Apex because there's nothing worse than getting stopped out when you didn't realize, or having them end your account because you didn't realize that your trailing threshold had creeped up on you so much because you kept trying to hold for bigger moves that didn't work. I've done that. Um, no, that's it depends on. It's such a broad statement. Let me try to find an example where we can talk about it. So let's say, Pedro, just for grins, that everything says down in the market, right? Everything says down and you're trading and there's absolutely nothing in the way. So let's get everything out of the way on the large chart. And let's just say hypothetically, everything says down, 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 nothing in the way. And I entered the market right here. And this is my stop, right? And then the market starts coming down and I get a pivot and maybe I reduce my risk behind this pivot. And the market's still going down and I get that big key pivot and then I trail my stop behind that pivot. And then everything still says down and I get another pivot and then I trail behind that pivot. So for holding for bigger moves, I'll chase pivots all the way down, right? There's another pivot. Now my risk is down here. There's another pivot. Now my risk is down here. Keep it on the safe side of resistance until it forms a pivot, and now it's down here. And then there's a pivot, and now I'm out, right? So that's one theory for holding for bigger moves is, yeah, chase pivots, chase, 2, 3 bar pivots. Um, for Apex though, if your pivot is all the way up here and the market gets to 45 and you get stopped out at 50, you're giving a lot back, right? So you've got to be very confident in your large chart to be able to sit on a trade with that much pullback. Um, the idea with Apex is get paid, get paid, get paid consistently. So when I hit a blue line that may stop the market, why not just take the money, right? And then wait for your next best. When I hit the blue line, I'm probably just exiting. If you look out, Cooley, on your Rhythmic Trader Pro program, it'll tell you exactly what the liquidation is after 5 p.m. Central every day. It's not a dumb question at all. It's a good question. Um, so Pedro, does that make sense? If between here and here, I know that's where I'm going, I may chase little pullbacks on the small chart. Um, and typically, that's more of something that I'm doing when my triggers look like this. When they're their absolute strongest, it becomes easier to do that. When it's really, really railing, when you start to give up momentum, when you start bouncing off of areas, I'm a big fan with weak triggers. I would have been out right here, and I just don't care what happens next. I might have taken one shot with divergence and managed out with the second. So, um, and that's one of those ones. Keep taking pictures, right? Keep taking pictures. Drop them in the room. Be on simulator and try to hold for big moves when the large chart says hold for big moves, right? That's the easiest way to do it. Look at that. Large chart had odds favorable, had a clear path. There was your pullback to the midband inside of favorable large triggers. 2 divergences don't scare us, right? Takes 3. And sure enough, right to trouble. Pretty cool. Who's going to show me that picture? Daryl's going to show me that picture. Oh, Daryl. But now we have divergence at a pivot high. That's okay. Sometimes you have to go to the bathroom. I know I do. But guys, do you see how the pullback to support inside of favorable large triggers lines up with the tail on the large chart? I'm trying to make that a little bigger for you. It lines up right here with the tail on the large chart. Did anybody catch that one? Did anybody go long from the termination that creates the full reversal, that gives odds favorable, that has a clear path, that pulls back to a midband inside of favorable large triggers? Because great googly moogly. That's my first hour every day. Jose, you got it? Awesome. Amazing. Guys, that's the best of the best. And one of the reasons that I suggest simplifying, I don't give trading advice, but one of the reasons that I think simplifying is so important is because if you're overthinking 2 divergences, you might have missed the trade. If you thought, oh no, it might go down to here outside of favorable large triggers, you missed the trade, right? If you overthought this, you missed the trade. Or if you weren't at your desk. But if you kept it super simple and you said to yourself, bum, 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 self, let me look at my checklist. Is it coming from a good top or bottom? Yes. Do I have odds favorable? Absolutely. No terminations, not a 1 present. Area inside of favorable large triggers? Well, that was 4 yeses. And what did 4 yeses do for you? From somewhere around 43 up to 67. 24 ticks, $240 worth of profit with a clear path. Pretty awesome, right? But if you're looking at other stuff, if you're focusing on 4 different markets, if you're trying to find 15 different trades, you might have talked yourself out of it. And if you talked yourself out of it, you have to take that picture, go back, and talk yourself back into it. Don't miss it. So high probability, 3 rules, 2 charts, guys. It's 5 things to think about. This particular piece of paper is called Too Many Mind. Have you guys seen The Last Samurai? Last Samurai. Too many mind. What does that mean? Do you guys remember this? Little kid comes up to him, too many mind. Mind the sword, mind the people watch, mind the enemy. Too many mind, no mind. Guys, this picture is your too many mind. 5 things to think about is a lot for a brand new user. When you add in that 50-50 trade, you're looking at 4 rules on 3 charts. That's 7 things to think about. Both of them create 7 things you have to focus on. Every time you begin to read the charts, you have to get rid of the ones, um, that don't fit, and make sure that you're in the right spot. Then you start adding momentum trades and HVA trades and edge trades. And you get to this point where it's overwhelming. And I told someone once in a very joking manner, I was like, you bastardized the rules. You started taking one trade rule and doing it with another trade rule. And guys, that's one of the challenges that happens when you start looking for too much. And that's, again, is what this KISS plan is designed for, to keep you focused on the best. So you never miss the greatest opportunities as you go through the process of taking pictures, becoming a chart reader, so that you can find more opportunities. Oops, and then Joel. And Joel, we talked about this one, didn't we? Termination, termination, termination. You take the perfect entry with the least amount of risk to get back to it. Great management trading into a termination condition when all the charts suggest that a little more down is in order. No, don't be sorry. You broke rule number 2, but you did it beautifully. Jose, good bottom, odds favorable. Ah, you got in a little early. Look for that HVA maybe. Get out at the conservative. And then you took the re-entry. And you got stopped out. How'd you get stopped out on that one? Just move your stop too quick? Or was that from the previous long? Oh, okay. Stopped out of the first trade. Got you. And then this one went to target 2. Nice trading, Jose. Doing the dance with the market, right? Over here on that first one, I like getting on the right side of those small triggers. See this right here where it kind of bounces and pops? Large triggers roll. It's the exact same price, Jose, but you kind of let it did its dance. That's a big patience piece. Um, let the small triggers be on the correct side of the large. Let the large roll, and then you're good. Nice trading, man. Cav, momentum. Large chart says giddy up. Odds favorable, termination, coming off support, everything screaming. You let price get above the one-to-ones, and when it pulls back to the one-to-ones with everything up, you take a beautiful momentum style trade and make money. So Cav, here's the question. Whoops, where'd it go? Large trigger with the mid band and blue fibs 1-to-1s. Cool. Why did you go from up top and not down bottom? Why from this fib and not this fib? Just curious. Was it because of the momentum over here? I love that you discussed the small chart. What was it about the large chart that made you feel good about the top? And I know that you have. I know you have reasons, right? Because with that much momentum, it's just a momentum style trade. But that's the look, dude. You break it, waiting for more confirmation. That's the money look right there, where it gets above it and then pulls back. And notice here, you're on the wrong side of it and it pushes lower. Isn't that awesome? And then Pedro, to go back to what we talked about, when all your triggers are above support and you're thinking, man, I want to take a long trade, but I'm not sure where from, there's a reversal bar on the correct side. So utilizing everything up with momentum, and then you get to the right side of the trade. But Cav, you nailed it, brother. That's a good one. Be like water, become the teapot. I love it. Killing it, guys. You're doing great. 50-50 with divergence. 50-50 with two divergences. We've seen that one today, haven't we? Right off that termination condition, right into that termination condition. That becomes tough. There's those weak triggers and divergences, and sure enough, trend trade didn't work, rules not met. Isn't it cool, guys? All you have to do is talk about the advantages, embrace the advantages, and then just incorporate a little patience into what you do. Speaking of patience, please be patient while I take a few minutes, guys. It's 11 o'clock. Oh. Michael, yes. Sorry, before I go. Absolutely. You ready? There it is. Will it go up? Let's find out. Come on, shake 8 ball, shake 8 ball, shake 8 ball. Outlook's not so good, Michael. So guys, there is no predicting. And Michael, I'm glad you said that. And I went to the 8 ball just because it's kind of funny, right? There is no predicting. I'm not predicting what the market's going to do ever. I don't know. And I want you guys to embrace that. You have no idea what the market's going to do, right? Everything said the market was going to go down with a clear path, and it went up. But there are patterns that can create an advantage, right? There are patterns that can give you a little heads up to help you out. But here's the thing, Michael, are you ready? I want you to look at this trade. Thank you, Jose, for giving it to us. Termination creates a full reversal. Full reversal gives you odds favorable, clear path, perfect entry, loss. Why? Why did he lose this trade, Michael? Because somebody with a bunch of money made it go up. That's sorry, rhetorical. I don't mean to get you typing. Yeah, that's a sell. Isn't that everything that you look for continuation to the downside? Isn't that the perfect storm? But the reality is, Michael, is that right at this moment, some asshole with deep pockets pushed it up. We couldn't have foreseen it. We couldn't have predicted it. We couldn't have anticipated it. But what we can do is I can say that with this look and this entry, I've gone back 100 times, right? I've gone back 100 times. And what I've found is that it wins more than it loses. So even getting into the perfect trade, Michael, I have to be very honest with myself. I have no idea what's going to happen. I'm clueless. It's either going to go up or down, but this is a pattern that when it looks exactly like this, it tends to go down more than it goes up. Does that make sense? And I'm glad that you asked that because this isn't predictive software, guys. This is patterns that create a statistical advantage because they've repeated themselves for decades. And because my savant brother has studied them over and over and over again and put these indicators together that say when this happens, this is typically the result, but when this happens right after it, this is typically the result. So you learn the patterns, you memorize the patterns, you look at them over and over until they become easy so that you don't miss them. Here's another one. Perfect short didn't work. And it's such a good look that I put it in here. And this looks exactly like Jose's. Odds favorable, clear path. Typically wins 70 to 80% of the time. There's your 20%. And that was crude oil in April. And Jose's was crude oil in July. Exact same look. Exact same look. But what I do know is that it does that more often. Does that make sense, everybody? We are not swamis. We have no idea. And I think for me, it's kind of cool. It removes the burden a little bit. And this is it right there. When you stop expecting to win every trade, you're going to start winning more of your trades because you don't worry about anything other than the execution of the method because the method has been proven to win more than it loses. It's pretty cool. When you believe you know what's going to happen, you set yourself up for failure. And when you take a loss, when you don't care what happens, the trade doesn't matter. It's a collection. It's not one trade. All there are up and down ticks. Emotional pain comes from what you believe. If you believe it should have gone down and it goes up, it hurts. You get your feelings hurt. If you say to yourself, I have a statistical advantage, but I really don't give two shits what happens, it doesn't matter what happens. So, pardon my swearing on that one, but sometimes I believe it's appropriate for effect. Great question, Michael. Awesome question. And it put me right on a soapbox, didn't it? Sorry. Guys, I'm going to take a few minutes. I'm going to go refill my water, stretch my legs a little bit. Do the same. Nobody should stare at a screen for 4 hours straight. S&P has no rules met. Crude oil has no rules met. NASDAQ has no rules met. Guys, these are all affectionately what we call go make a sandwich patterns. I'll be back in about 5, guys. All right, guys, home stretch. Here we go. Last hour. Um, what are you guys? What do you want to talk about? S&P, smalls have barely broken, large have not. They're flat and lifeless. No areas inside of favorable large triggers. That's a tough look if you're looking for a high probability trend trade. Termination created a full reversal. Full reversal got us right back to support. We'll have to make a decision. Kind of cool. Quick reads. And look at that mess. From resistance to support to the pushback. Can't break it to the pushback. Hasn't broken it yet. Man. What do you want to talk about, guys? This is the part of the day where it's up to you. Tell me what we're going to talk about, or I'm just going to mute. I'm going to draw pictures, play video games. What do you guys want to talk about? What do you need help with? What would make tomorrow easier for you? What would make this afternoon easier for you? Remember, guys, I understand this stuff. I want to help you understand this stuff. That's a termination condition. Let's talk mid-band. Well, there's two things to think about. Michael, you're asking me to predict again. Shit. Hold on. Will the market kick? I got to ask again later. Even the 8 ball can't predict it. Um, if you're in a trade and it's not closed before the end of the trading day, you go into overnight, which means that you held a position beyond the intraday, which means that your broker may shut you down and ask for about an extra $10,000. So there's intraday trading, and then there is overnight trading, and there's long-term trading. So it depends on your account and what's allowed. You'd want to double check with your broker though. Stuff like Apex, Top Step, prop firms, they will talk. They'll tell you that you have to close before the market closes. You have to be out of a position before the market closes. And then let's talk mid-bands. Let's talk about the first mid-band talk, which brings us into the gap theory, DJ. So let's talk about the gap theory first and what it means to us. The gap theory just says that if price pulls away from the synthetic triggers, and when it says synthetic triggers, it means the large triggers on the large chart. So when price accelerates away from the large triggers on the large chart and runs into an area, that area, it may snap back and close the gap to the large triggers. So the first way we're going to talk about mid bands, DJ, is let me go to the tutorial section. And I'm going to go to tops and bottoms. Bum, 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 bum. So the first way we're going to talk about it is a large chart midband if the large triggers are a full bar away. And this incorporates the gap theory. So if price accelerates away from the large triggers and hits a midband on your large chart, DJ, if there's room for a full reversal bar, meaning that your large triggers are above the reversal bar marker, This mid-band is a termination condition. Does that make sense? And you see this, and let's go back and just do it. We'll see if it happened on the NASDAQ a couple times. Bum, bum, bum. It doesn't always. But here's a good example. Price accelerates all the way back into the mid-band here. Large triggers are a full bar away. This mid-band is behaving as a termination condition. It also lines up with other terminations, but visually, I'm not looking for long trades because it's likely to snap back. And you'll see these patterns happen an awful lot. And of course, they're not going to in the moment. There's that mid-band again. Large triggers are a full bar away. And this is such a common pattern that if you take all of your indicators off of a chart and only run trigger lines, you'll begin to recognize where there was probably a mid-band. So right here, weak triggers push up, probably a mid-band right there. Let's see, at 911-ish. Whoops. So that's the first way, DJ, is identifying them as termination conditions on the large chart. Come on, indicators. Big gray screen, right? That's no fun. There we go. At 911, what did it look like? I think it was right about there. Didn't make it to the mid-band, but it still closed the gap. Here it hit the mid-band, closed the gap. So that's the first way. We're going to use the large chart to identify mid-bands that may hold. Here it's the mid-band, everything's on top of it. Gap theory is not in place. Doesn't count. The second way is we're going to use it for entries, right? Is we're going to go through, and on the small chart, we will use mid-bands. And really the only thing that we use mid-bands for are one of our areas inside of favorable large triggers to identify entries. And that's their only role. Is if they happen to be inside of favorable large triggers, then they create a point where the markets has the potential to bounce. And those are really the only two things, DJ. It's nothing more than a moving average. But it's that moving averages relationship to other indicators, typically the large triggers, that lets you know how you're going to use them. On a large chart, it can be a termination condition. On a small chart, it can create an area for a bounce. Does that help? I hope. It's just a moving average. And that's into a termination condition. So here the midband doesn't even have a role because rules aren't met. Here the midband's outside of favorable large triggers, rules aren't met, midband doesn't have a role. It's just a moving average. See how price accelerates away from the large triggers? They're a full bar away. Is there anything different if the midband is below or in between large and small triggers? Which chart? Let's use this for an example. Do you see how the midband is above the triggers, higher than the areas when you're thinking short? I think I got your question. When my midband is above my favorable large triggers, I don't care for it because I've gone beyond my bounce point, right? If it's just a little bit below, let's see if we can find an example of that. Um, right in here, Jim H. Some Mark Douglas. So there's going to be times, and I'm going to look for it, where your midband may be a hair or two outside of the triggers, um, but on the trade side. And I'm looking for a decent example of it real quick. Bum, 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 bum. Here, my midband is like a tick above, DJ, right? And if the rules were met and I was looking for a trade on the pullback, a tick above doesn't scare me so much. You're looking at crude oil. It was between, which chart are we talking about, DJ? Show me a picture. Here it's behaving as resistance. Can you show me a picture of what you're talking about? Give me a timestamp, something, so that I don't have to try to paint a picture in my mind and guess. You're looking at crude oil. There we go. At 11:16. So let's circle it. So you gave me an incomplete picture, right? Hold it. At 11:16? What what time zone are you in, DJ? Or your computer? What time zone is your computer in? Because mine at 11:16 looks like this. Is that yesterday? Hold on. Are you in January? Nope. You're still in December, my friend. So crude oil has rolled. So there's our first challenge is you are in December, we are in the January contract of crude oil. So you're trading or looking at an expired contract. So go right up here and put in CL 1-24. And that'll be the first part. But right here, remember the idea of favorable large triggers where they're one on top of the other? And when we talk about an area for entry using that midband, can we just say hypothetically that your large chart had odds favorable momentum, that your large chart had no terminations, and you get a pullback? And if I look from the top of the triggers to the bottom of the triggers, do you see how I've looked through the lines? From the highest line to the bottom line. Where are the areas that are inside of those triggers? The midband is above the bottom of that line, isn't it? That's my lowest point of support. That midband is still inside of those triggers. That midband was the perfect bounce point, assuming the rules were met on the large chart. And yeah, NinjaTrader 8 will give you an update. It'll give you an option to roll your contracts. But does that make sense, DJ? It's still inside of those triggers. So the midband is just behaving as support inside of favorable large triggers, which if the rules were met, is the precise area for that bounce. And it never got below the large triggers. It did get a little bit below the synthetics. But remember that the large and the synthetics work together. It's the buddy system. When we talk about those favorable large triggers, our areas fall below the highest point and the lowest point, whether it's the synthetics or the large on top. It's inside of those. Yeah. Like I opened up crude oil this morning for the first time on Trader 8 since the roll, and it gave me the notification, hey, it's time to roll. And I just had to click yes. But if you didn't get the notification, DJ, you can just change it right up top to January 24. And we'll at least get you looking at a market that's probably moving a lot better than this one. But even on an expired market, the rules work. Pretty cool. Does that help? And here we're directly into a termination condition. Yeah, you needed to click yes, but that's okay. Just go up here to where it says crude oil 1224 and just type in CL 124. And it'll roll it for you. It'll get you at that contract. And then we can at least look at the same thing, right? Make it a little easier on you. Guys, price reaches a divergence low. Absolutely no trigger lines break through. Look at the bounce that's happening off that key area. Isn't that outstanding? That not one of you took that short trade because rule number 2 wasn't met. Into resistance. And we're just waiting. Is it going to break? Is it not going to break? I don't know. And then here's our S&P. It's just dancing. Still don't have a rule met though. And DJ, if you need help with that, let me know. Again, if we go to the software instruction, rolling contracts. Every answer we could ever want. That's Market Analyzer. There it is right there. So type in the new chart, the month. So for example, right up here, you're going to type in CL 01-24. You may not even need to put the 0 in there, but that'll get it changed for you. Yeah, you're just on last month's contract right now. You'll be amazed at how much more the market moves. Look at the bounce off of the termination, guys. God, I love it. I love my rules. They're just designed to keep me safe. And DJ, your amazing question turned into a couple lessons there. That was pretty cool. Shaq, how we doing, brother? You okay? I know you're about 3 or 4 days in. The stuff I'm saying is probably starting to click a little bit, I hope. John in Alaska, good to see you in here. Didn't see you sneak in. Craig, how we feeling, bud? You doing okay? Hopefully a little better every day. Guys, I get comfortable with people real quick. If you're in here, your family, if you have a problem, I want to solve it, give me that opportunity. There are no stupid questions, right? Never has been. Probably never will be. Awesome. No worries, Shaq. Could I get you to write that down that I have both knowledge and wisdom? I want to give that note to my wife. It's amazing, Gary. I love it. I love everything about it. Um, Guys, if you've ever heard me talk in the room, um, yeah, that's my plan. This is all I traded for years, guys. This was my focus 100%. And I've been doing what my brother's been working on for the last month. I gave him a month to go through it, create plans, and I've been studying with my brother, and it's been outstanding. The opportunities that present themselves in the market with a couple little refinements, a little bit here and there, it's a little advanced. You have to have a great foundation to understand it, but it just creates more opportunity. But more importantly for me, is it created the opportunity to hold for bigger moves. Created patterns that allowed me to stay in the market longer to capitalize more. So I'm a big fan, guys. If you got it in you, his first classroom, I want to say starts next week. I'm excited to see how it goes. We've been training for the last, I guess we've been going for the last 4 or 5 days. I think we started on the 18th. That's the 21st. And I've got maybe the 17th. So from right about here all the way up to the top, these are all the pictures that I've been going through, and this is just a portion of the ones that I've shared and saved. Here's even more of them. Here's even more of them. Um, Guys, I've gone full student mode, and I'll tell you what, it's already paying dividends. It's pretty cool. So I would encourage anybody to do it. I love it. But also, I have to say, if you don't have the foundation, it may be difficult. May be difficult. You got to understand odds favorable. You got to be good with terminations. And you've got to respect trigger lines. So, good stuff. Thanks for asking. I'm sure that I bugged the hell out of him, Gary, to be honest with you. Our Skype is nonstop. I mean, our Skype is nonstop going through, sharing pictures all day long. Um, we both wake up a couple hours before the market. This is my talk with him. These are all the pictures that we go through over and over and over on both sides. He posts, I post, he posts, I post, he reads, I read. I ask, he answers, and it's pretty outstanding. It's a lot of fun, and it's fun working with your brother. My brother turns out it's pretty cool, so good stuff. All right, next question, guys. What do we want to talk about? Played golf yesterday. Played 18 holes with two balls. Actually, I played 16 holes with two balls. The sun went down. That's pretty good and kind of funny. I was on pace for about an 89-90. Um, I was playing well. I was hitting all of my goals, and then I just blew up on a par five. Got a triple. They say that. I don't know if that's true. But yesterday I went in. I was like, no mulligans, nothing, and I was hitting the ball really well. And it was near misses. The greens on this course were terrifying. They were multi-level and fast. So getting onto the greens was scary. I had quite a few three putts. You break 100 every hole. It's pretty cool. Oh no, Ace, you and my brother getting the nerves burned. Man, I hope it helps. Have you sitting up feeling good for Thanksgiving dinner? I haven't had to do that yet, knock on wood. I've just gotten fusions, but haven't had to go back and burn anything. So I know my brother's done it like 10 times. Apparently they grow back. Told him to quit being so healthy. I suppose so. It's hard to say I've had two spine fusions and still feel lucky. I am. I'm very fortunate. Guys, we're watching a termination condition slowly but surely turn the market. This is that patience, right? Look at the timestamps. It hit it at 18. We're at 38, 37. And it's still rolling. And now the large triggers are starting to roll. And we're just waiting to see what happens. It's hard to sit and do nothing, isn't it? I can't do it. That's why I ramble in this class. Because I can't just sit here and do absolutely nothing. I like it when you guys ask questions. It makes my job easier. I guess all they wanted was to hit that termination. They just said, man, let's get it, guys. What do you say? And once again, there's just nothing to do. Coming into the holidays, guys, the S&P is at a virtual standstill. Coming into the holidays, Cav. Everybody that does this professionally made their money. They went home. Those of us that are learning still, we're trying to squeeze everything out of it. And I'm telling you right now, holiday weeks will test your patience. There are fewer and fewer trades. When the pattern's set up, they're outstanding. But there's less movement. There's less volume. There's a lot of guys that are already on their boats, already at their summer homes or their winter homes, over the river, through the woods. And maybe it'll speed up after lunch. You never know. Is there any reason why you can't, Cav? How about when you have a day like today, you'll be a happy camper? If is for the people that don't have rules. When is for those of us that have a solid plan. You have a solid plan, my friend. Guys, we're going to call it early today, I think. Unless there's something that y'all would like to talk about, I'm not going to sit here wasting your time. You can go trade the market, look for terminations. Um, you don't know what I have? I guess. Well, then, if you're not sure about questions, write them down tonight. Bring them in tomorrow. Tomorrow is Wednesday, guys. It's the last day of the week for us before Thanksgiving holiday, and then we're going to take a 4-day break. Um, guys, go trade. Go watch a video. Let me give you guys a video watch list. If you want to take this slower time and just watch some videos, I've got a list that was compiled by John that's outstanding, guys. Great way to spend a little bit of time. Bump it up to 1.5 times speed. He's great on his mellow cadence. Um, and if you have questions from a video that you watch, bring it to the room. If you have questions from the user guide, bring it to the room. If you have a question because you were over in Traders Chat and you saw somebody do something, bring it to the room. The more questions you ask, guys, the better it gets. The better it gets. That's it for me today, guys. I'm going to call it. So have an awesome afternoon. And then I'll see you tomorrow morning, 9 a.m. We'll do it one more time before the holiday. I hope you do too, Joel. And I'll see you guys in the morning. Take care, everybody. You guys be good.